Hey guys, welcome back. This is episode 11, part 11 of the Python stock value investing series. So I'm going to continue from where I left off. So, all right, let me just start with a new row. So, Microsoft is not a dividend stock, right? So Microsoft is not that. Well, I mean, they pay dividend, but would you consider a dividend stock? I don't know. So there is this good tool called Seeking Alpha. They have a dividend history. So if you Google Seeking Alpha dividend history, MSFT, right? So if you just click on it, so they have this chart, right? They tell you like how much dividend they paid, right? So let me see the past 10 years. So you see that they've been paying consistently, and just it's growing, right? So that's what you want. You want dividend to be, right? Like if it's profit share, that means, and if the profit share is going up, that means the company's doing well theoretically, right? There's actually companies that actually take loan to pay you, which, if you ask me, it's a form of financial engineering because they're doing that to keep their stock price high. I mean, or basically they can get a lower interest rate, so they take that and I don't know. It's in my opinion, that's like borderline scamming. But anyway, Microsoft is huge. Like if you're watching this on desktop, most likely you have a PC which is running Windows. Now Microsoft has like data centers everywhere. What else they're big on? They're like they're everywhere, right? So you want your dividend to be like that. You want it to be either be consistent, flat, like flat, straight, or flat up. You don't want it to be like up and down, up and down, up and down, right? You don't want it to be like, who's good like this? Veil, Seeking Alpha. Let me see, dividend history. I can't type today. Veil is iron ore company. They basically, it's a Brazilian company. You see this, like, you see their dividend history is like up, down. Sometimes they don't pay, and then it's like they do one gigantic payout. It's like, you don't want that, right? You don't want this type of pattern because, well, people that do dividend, they want it, right? I mean, imagine you go to a job and they're like, hey, 1 month we're gonna pay you, next month we're not gonna pay you, and the next month you're gonna get like 3 times as much, and you're not gonna get anything after that free. Like, you don't want to hear that, right? You want it to be like consistent. You want it to look like this, right? Because that's what people want. A lot of dividend stockholders are retirees, right? Or people on like pension, like they run pension funds or some kind of fund where they rely on a steady stream of income. And a lot of companies, they want their investment money, right? So they try to keep it as stable as possible. So not a lot of companies do this, by the way. Not a lot of companies can achieve this like steady level, dividend while staying as a market leader. So there's not a whole lot of companies that do this, right? But anyway, so let's say this is a stock company, right? You want to figure out the dividend. So you can just type in MSFT.dividends. And you notice you get it all the way from 2003 all the way to 2021. Okay. So what if I want to see the pattern? If you type in dot plot, something happened in 2004. I don't know what happened in 2004. They gave like a giant dividend, and then it just kind of dropped, but then it's been consistent since. So when you first look at this, you might think like, oh, what the hell? What happened? Right? You might think like, is something wrong with white finance or something? Well, clearly, if you go to the Seeking Alpha and if you do max, you notice here too that they also have a giant bump right here. So it's probably not data. Or they might be getting from Seeking Alpha might be getting data from Yahoo Finance as well. You don't know. So the way you can verify is by going to SEC Edgar. You guys don't know. This is, every year, all companies that file stocks. That are publicly traded, have to report 10K and 10Q. 10K, 10Q is like their sort of like their tax. They're sort of their like 1040, right? 1040 is if you're not from US, that's tax, right, for individuals. So 10K is the annual and 10Q is the quarterly. So they have to report this every year. Otherwise, they want to make sure that the government wants to make sure that they're not like cheating people, right? Like, do you guys know about this Nikola guy? This Nikola guy, right? This dude, he claimed that he made. Oh wait, sorry. Let me move my head there. This dude claimed that he made this like electric truck and is just as good, if not better than Tesla. But this dude, he's basically scam people, right? He has this video. Oh, sorry about that. He has a video. I don't know if I could. Basically, I'll link to the video in the bottom. Sorry about that. Where's my head? Yeah. Basically, what happened was this guy, he made a video of the truck moving, but what he did was he put the truck on top of a hill, and then he basically like rolled it down, and then he told the investors like, "See, it works, And then there was a lot of filtering and Photoshop effect, but this truck doesn't work, right? It didn't work. Well, I don't know if it works now, but back then it didn't work, and he went IPO, which means he sold shares of that company, while making bogus claims, and then he claimed he had sales, but did he have any? I don't know. He's making these bogus claims about a car that doesn't work. So how can you trust that this guy has actual sales or anything? All right. So you don't know. So 10K 10Q is to prevent people from like that guy from scamming people. I mean this dude stole like billions of dollars, right? Like I don't know how this guy's not in jail, or like the other lady, the Theranos, the blonde lady who like scammed investors out of like $6 billion for bogus medical claim stuff. I mean, I don't understand how these people are not in jail. Like, it makes no sense. Like, some kid like sells marijuana on the street, and this kid gets like 5 years, and these people are just like walking around like, hey, I scammed people out of like billions of dollars, but look at me, I look like a business guy. I mean, anyway, sorry, some for the rant. But anyway, now you can see what this is 10K 10Q is for, right? So you have to be aware, like some data that you see like this, you don't know. So because a lot of people like that Seeking Alpha one, they're basing their data on like one source, right? And you don't know because one guy is basically copying, like one guy gets this, like, sorry, where's my finger? One guy gets the source and all these other guys are copying from him. But the original source, nobody really verifies because people are just, I don't know, just lazy, I guess. So don't be that guy, right? So you want to make sure you verify, right? Trust, but verify. You know what? Don't trust, just verify. Screw the trust part, just verify, okay? Anyway, so that's the dividends, right? Okay, now take a look at their balance sheet. Like we want you guys remember balance sheet, right? Balance sheet is, let me turn this to Markdown, right? A equals L plus E, right? I think I have to put a pound, I think, right? A equals L plus E, right? So L, assets equals liabilities plus equity. So here's a good example, okay? Assets and liabilities. Here, let me give you a good example. Okay, so total assets equals liabilities plus shareholder equity. So what the hell does this mean? Like, let me give you a good example, right? Suppose you buy a house for 100K, okay? You're like, you just got a job and you start a family. And sorry, where am I? Like, why am I going back and forth? Sorry, I have so many tabs open. Like, I'm confused. Sorry about that. So you buy a house, right? And this house is 100K. Nice neighborhood. It's up and coming neighborhood. Not the greatest, but nice. The lawn's nice. The neighbors seem nice. It's only 100K. Because it's the suburbs. Because in downtown, in the city where you live, condos are like, I don't know, like 300K, right? It's too much. So you go to the burbs, buy a nice house, and the bank is willing to lend you $90,000, right? So assets, that's your house, right? 100K. Liabilities, that's the loan that you owe, is 90K, and equity is a down payment, okay? So the way you reduce your liability is by paying off your debt, right? Then your equity goes up. So you can imagine like this navy, not navy blue, what is this? This kind of like a light blue or something. Anyway, the top right, imagine that shrinks and your equity goes up, right? because the value of your house, let's assume the house price stays the same. Okay, the way that you can get higher equity basically means, basically is profit in this case. It's not profit, but it's like what you owe. I'm sorry, what you own. So equity is what you own, and liability is what you owe, right? You want to owe less and you want to own more, right? So the way you can sort of balance this, because they have to balance out, right? A equals L plus E. This has to balance, right? You can't you have to balance. And the way you do that is by shrinking the liabilities, or you increase the equity, right? So you pay off the debt, or you put in down more payment. Another way is the debt is fixed, right? But the value of the asset can go up, right? So the house went from 100K to 200K, but you only owe 90K, right? So 200K minus 90 is 110. So now your equity went from 10K to 110K, right? It balances, right? 200 equals 90 plus 110. So either the assets go up, the value of the assets go up, or you just put in more equity, or you pay down your liabilities, right? So that's the trend that you want to look at, is how much asset you got, how much liabilities you have remaining, and is your equity going up, right? Because that's the name of the game, right? You want to own more than what you owe, right? Simple. So let's take a look at the quarterly statement. Okay, so the quarterly statement, let me look at the syntax here, going down here. If you press Alt Enter, it's msft.quarterly balance sheet. Balance sheet, right? So there you go. So if you look at this quarterly balance sheet, if you go to Yahoo Financials, and then go to balance sheet, you'll notice all these columns, right? Assets, debt, blah blah blah. It's this, right? It's just out of order, right? Because this one is in accounting best practice ordering, and this is Pandas does its own weird ordering, but it's there.